Buddy, so I'm here with my dad, Raul, Raul Jr. I'm the third, so I'm gonna hand him off the camera, let him introduce himself, and then ask him a few questions here.
Hey guys, how are you? I'm Dr. G. Most of you guys already know me by Dr. G Smile. I'm the honorable dad of this young entrepreneur over here. He looks like me, right? In anyways, just to give you a few words, it feels very privileged to learn from my own son. I mean, in life, normally it takes another maybe 1 or 2 decades before kids can really teach their parents about business and wealth accumulation and the diversity of opportunities that it comes with the financial industry. But being so young, always been so actively involved in the family businesses and then branching out completely, it's just incredible to see my son from my ex-wife's house in a little area that we used to call it the closet, because literally speaking it was a linen closet. He made it into his first HQ to come to my house, living with me for a few years and solidifying our relationship, something that only God knows how much I value. Seeing him jump from the little trading to the bigger trading and trading until that became his actual lifestyle, his source of living, and now he enjoys it. And that's the mission statement, that you gotta enjoy your life, because at the end of the line, it's only one journey you have to take the chances on. Let's do it right, guys. Now he has his own place, he's got his own house, he's been going little by little, scaling up the game with the cars, with with his gains, he's been able to enjoy life more. And you've seen it. There's nothing that I would not applaud more than my own son's success. He's done it on his own. And that is what the legacy of himself is gonna be portrayed to his lifestyle for you guys. So I'm proud daddy. It's right here.
Everybody's gonna be the same. So I want to actually give you guys some advice. Number one, I want to say this. You guys must really look at Forex. You guys really need to understand what Forex can do for you. And the best way to do this is to not always look at the end game. It's not always to look at the Lamborghinis, the penthouses, the first class flights. It's not always best to look at things like that, because sometimes in your head, those dreams can feel a little far-fetched, right? So those can always be the goal. Let them be the goal, right? If that is your goals. But what you should be doing is also looking at the more immediate things Forex can do for you, right? Take it, if you're somebody who can't afford to go out, or you can afford to go out once every 2 months, right? And it's not even like a great going out. It's like just to have some dinner, you know what I mean? Or if you're somebody that is like somebody who wants to get some new shoes, you don't have new shoes, you're struggling, right? But you're hustling up some money, you know what I mean? What Forex can do for you is the little things. Say you make $1,000 profit and you withdraw that. That's $1,000. You can get yourself 3 new pairs of sneakers, depending what you're into, right? You can go out for a crazy night, right? That's how you can start things off. You can build income slowly but surely. You can start by getting these things that seem minimal to a lot of people, but they're actually really beneficial. You know what I mean? A lot of you guys were impressed when you see me go out and I'm buying sneakers, and I'll buy sneakers. You guys are like, wow, that's amazing. Bro, sneakers are like what? $100, $200, $300? What you need to think about is you don't have to have a net worth of $3 million to now start spending on something that costs you $300. No. That's really not how it is. Take note, I'm not a financial advisor, but let me just tell you. All right, let me tell you. At the end of the day, you don't have to wait to be at a certain point to start spoiling yourself. One thing I always tell everybody in my mentorship is that when you start making some money, say you have a really great week or 2 weeks, withdraw some of your money and spend it on yourself. It does wonders for your psychology. It does absolute wonders. That's the mistake people make. Everybody's trying to make $100,000 and buy a Lamborghini. It doesn't start like that. The building stages to there are amazing, and that is what's amazing. Say you're a gamer, you want a new PC, right? You want a new PC. Your end game is to have a whole gaming studio. That don't mean you can't buy yourself a new PC, right? That don't mean you can't buy yourself a gaming laptop along the way. These things cost less, but they're great for the mentality, guys. They're great for the mentality. A lot of people stay looking at, they just want to make one trade to win a Lambo. That's why a lot of people get into the markets. That's why a lot of people, guys, that's why a lot of people lose out in trading, or they over leverage, or they just get like cooked by the markets, because everybody's trying to make that Lamborghini purchase in one trade. And they're not even looking for the build up to it. Before I had a Lamborghini, I had a Porsche. You know what I mean? I had a Mercedes, right? These are the things I had before that, right? Do you think if I was trying to make the Lamborghini off of one trade, I would have had any of those things going forward? Before I had the penthouse, I had the big family home. I had all these things. I'm going to show you if you keep wilding out. I'm going to show you. Do you think I would have enjoyed the journey? I would have never made enough money to get a Lamborghini or like change my whole lifestyle entirely if I didn't do these little things growing slowly but surely. And that's what's important, guys. It's the growth, the moment to get there. So I want you, when you trade and you make, I'm sorry guys if I'm rambling, I just want to drop this knowledge on you because I feel like a lot of traders and a lot of people don't tell you this. They don't tell you these things, and you need to understand these things if you actually want to move forward in the Forex market. Forex is beautiful before the Lamborghinis. Long before the Lamborghinis, Forex is beautiful.
Like the first time we went shopping at Walmart for food, grocery
shopping. The first time I ever went shopping and filled up 2 grocery carts and paid it off like it was nothing, because it was nothing at that time. It was nothing at that time. You guys understand what I'm saying to you? Stop trying to go for the Lambo immediately. The build up there is amazing. I swear to you. That's a lot. But if you're trading, bro, if you're like trading and you're making little profits here and there, to travel by yourself, it's probably going to be like $3,000. Say you trade for like a whole week, you come up with a $5,000 profit. It doesn't have to be Lambo profit, but you can fly business. That's the first time you'll be able to fly business. You understand what I'm saying to you? Always withdraw every now and again. Not all your profits, of course, because you're still compounding your accounts, but enough, guys, to keep feeding yourself, to say that I made this off of trading. I was able to buy this off of trading. I was able to do this off of trading. You were able to pay off your mortgage and all that. So yeah, it's super, super important, guys. It's super, super important to enjoy your profits and enjoy the ride going to the top. Because now that I'm right here, I just arrived. I'm at my Lambo level. I'm here. I'm at all my levels. Now it's time for my Koenigsegg level. Now, you know what I mean? Like right now, it's time to go for the Koenigsegg level, right? The end game in cars for me is always the Koenigsegg Jesko Absolute. That was the end game, like always, right? Like that was always the end game. But I have a Lamborghini now. You understand what I'm saying to you? I didn't have to go and get the Koenigsegg off the get-go, but now I have a Lamborghini. You see me? Nice and easy. So I get advice for all traders out there. And my advice, as I've been saying throughout the live since we started, is that the journey is what's important. Have the end game for sure, but the journey is what's important.
I'm wondering, for like a newer person, do you think that trying to find sort of more mechanical or methodical ways of entering and that type of stuff is more useful? Any advice and things like that would be just massive.
Yeah, my answer is it really depends, and here's why. If you make it too mechanical and too objectified, what happens is you're going to end up not getting into trades that are perfectly fine.
Yeah.
The system is too harsh of a filter, and it filters out trades. So it would probably be fine, but if you're too mechanical and too objective with it, it's an impediment to profitable trading. By the same token, if you're way loosey-goosey and you'll jump into whatever, like anything, and you'll enter without even any type of confirmation or rejection or indication that a zone is going to be holding at a level you're entering, if you don't have any filtering mechanism, then yeah, your trades are going to not be as great, because you're going to enter trades that immediately pop up into drawdown because you're entering without any sort of context that it's reversing at all. So what I like to tell, especially in my students, is we work with traders to help develop that objective side to where you have a little bit of mechanized trading criteria to help filter out shit that's just completely not something you should be trading. But then we also work to help people develop that experience in trading, the experience that is a result of applied experience that comes into the element of discretion and then you refine that over and over, and that's what generates intuition. And so intuition, wisdom about like, what the fuck should I do? Should I take this trade? Should I not? Is it perfect? Is it not? Even if it's not perfect, is it still worth a shot to enter? So those two things, the two takeaways I give you is when it comes to entry and exit criteria, you need to apply the same logic for where to your position at. If you don't have just preset targets, you need to be asking, where am I going to exit at? Like, where would be a good time? It all comes from price action. So the two things I'd say is wait for price to get to the levels that you're interested in entering the market at, and then wait for price to start rejecting those areas and bouncing away from them. This can be a combination of things. It can be a pin bar on any time frame, 1 minute, 1 hour, daily chart. It can be a bear or bull candle going away from the zone really quickly. It can be a series of small candles coming into a zone, then one quick candle popping up, going away from it. It's going to manifest itself in multiple different ways. That's where I'm saying you cannot be too like constrictive of your methodology around making it too mechanical. However, you should also be doing is just track all your trades, take screenshots of them, throw them in a Google Docs, Google Slide, notes section of your phone. Look at all the screenshots of what things look like after you enter. Then after the trade is completed, either to stop loss or to profit, take another screenshot and next to the original one. That way, whenever you're looking back at the end of the week, you can look back at your past 10 trades and say, that's what it looked like before, this is how it played out. This is before, this is after, this is before and after. So you'll be able to start getting what's called intuition. You'll be able to start developing that by just seeing the same shit over and over. And then what that'll oftentimes do for traders, especially the ones that I've worked with, is that will then change up your entry rules a little bit because you'll get more experience seeing like, wow, I didn't even notice that first, but after trading for like 2 months, I've seen like this right here is usually a good thing. If that happens, those are usually better trades. So then you can go and you can update your entry criteria. So it's a combination of those two things. Simple trading rules that are somewhat objective. You have to have those just to filter trades, but then also an element of discretion that you can only get through experience. And if you put those two things together long term, it's a way more comfortable, relaxed, intuitive way of trading because you're like, I can look here, I know what I'm looking for, but I also can let that little feeling kind of guide me as to what I should do.
Any best practices around psychology for trading that you would suggest? I'm putting in my headphones.
Yeah. So while you put in your headphones, I'll start. So psychology and trading. See, this is a super, super subjective thing because it's funny that some people will have a really difficult time mastering their emotions in psychology, but other people, it'll be like no big deal. They'll get profitable in like a month or two, which is crazy. There's people that I've taught before that are in my group, and then like a month or two later, they're trading live accounts, they're doing large volume, they're funded, doing all sorts of shit. And it's like they figured it out in 2 months. So when it comes to psychology, I think it's a super subjective thing. And I think what a person really has to do is become self-aware of the things that are not beneficial to their trading. And by the things that are beneficial, I mean the behavior patterns, the thought patterns. You have to become very self-aware at, oh, I'm doing this again. What happens most of the time I do this? I usually end up getting into a stupid trade or getting into a trade that the moment I enter, already having second doubts, checking it every 5 minutes, this and that. If you can become self-aware of your thought patterns and behavior patterns, and you can identify, wait, is the thing I'm doing right now contributing to most of the time having good outcomes in trading? And if you can be like, yes, that's fine. I'm not moving my stop loss. I'm not over risking. I'm risking the same thing what I was going to do. I'm following all the structure of my system. Then yeah, sure, you're fine. You're doing good. But if you can identify, whoa, time out. I'm about to enter this trade. What the fuck? Does this fit my rules? No, there's like, out of my 4 trading criteria, 2 of them are not even met. What the fuck? Why did I think this was in a downtrend a second ago? It looks like it's going sideways actually. So if you can catch yourself whenever it comes to those things, that's the point of mastering your psychology, is being able to be self-aware and catch yourself in those moments when your behavior and thought patterns are going down a line of progression, which is not contributing to favorable outcomes in trading. And the last thing I'll say is the way that you develop this is by meditation. If you can meditate, where you can focus on one fucking thing at a time without your brain running around like crazy, you can keep bringing your focus back to one thing, like your breath, for example, in meditation. That translates into making better, more logical, rational, calm decisions in life, because you can be to the point where you have the type of brain where you're like, all right, I want to trade. There's this trade here. Oh my gosh, I got to take it, got to trade, got to enter right now. But you can pause yourself and you can catch it. Wait, time out. I need to bring my focus back to whatever, my trading rules. What should I fucking be focusing on? Has this pulled to my zone? Has this started rejecting? Does it have favorable risk reward, if that's a thing you look at? And if you can identify, you can catch yourself in those moments and bring yourself back to what matters to execute the same thing every time, then yeah, you're probably going to do a lot better in trading. So that's the advice I give for people who are wanting to master psychology of trading, is know yourself and become self-aware of your thought and behavior patterns. Identify the ones that contribute to good outcomes in trading and keep more of those. Then identify the shitty ones and do less of those. That's it. What do you
Can you let us know, like, when you're like getting started, what was something that helped you deal with like psychology, like apart from the technicals, you know, like psychology, how to deal with emotions and all of it? Like, what did you do to get yourself set up with it?
Yeah, I think two things that come off the top of my head, there's probably a billion, but two things that come off the top of my head is, one, switching to demo, because that just removes all of the, fuck, I have to make a profit, I have to do this and that. So switching to demo and having the approach of, I'm not going to try to be profitable or not, I'm just going to place trades and see what happens and learn from what happens. So that's the first thing, switching to demo. Number two is like not watching all this fucking YouTube videos and forums and blogs and searching things on Google and strategies, just like dipping away from all of that and just focusing on me and the charts. Because what that allows you to do is it allows you to start to see what works the best for you, because you can, when that happens, this might happen next, and this, then you can see, okay, if I would have entered there, let's see what happens. So you put a sell order on, and it's just a demo account. You're not even trying to be profit. You're just trying to like see what happens. So you put a sell, you wake up the next morning, you see it's in profit, you'll close, you can come back, look at it later, see if it would have gone into more profit, and it kind of helps you like develop a little feel for like what your trading rules should be and this and that. So switch to a demo account. That way you remove a lot of emotions just by doing that. And number two, stop following everyone on social media. Just stop following all these YouTubers, me included, and just focus on you and the charts. If you do those two things, you'll switch to a demo account and you'll track your trading results, so you can start seeing what's working. And figure out, you can kind of carve out your system and put some rules in place, then change them and modify and optimize them, and then just get more data. But you're working on yourself instead of like measuring everyone else's dick on social media, trying to see what they're doing, and this person does that and that person does that. It's like so fucking confusing to the new person coming into trading. So if I was a new person coming into trading and I could give advice to myself back then, I say switch to a demo account, track your results, just find what works for you, and don't spend hours and hours and hours obsessively consuming content trying to learn things. Just, the market's going to go up or down. All your job is to do is decide. You can do it very simply. You don't need to learn all these crazy complicated things. So those are my two little pieces of advice. What do you make of that?